All eyes on U.S. CPI data ahead of next FOMC meeting. U.S. Fed's rate cut cycle faces test as November CPI data releases today. Industry experts predict zero rate cuts in 2025, with inflationary pressures potentially preventing the Fed from cutting interest rates during the FOMC meeting on January 28-29. All eyes are on U.S. inflation data to be released today. The U.S. Bureau of Labor Statistics is set to release its December CPI data on January 15, 2025, at 8:30 a.m. Eastern Time. Wednesday's CPI release will be the first big economic data the Fed receives in 2025 and before the FOMC meeting on January 28-29. Fed Chair Powell has repeatedly stated that incoming economic data will heavily influence interest rate decisions. The previous month's data showed that inflation remained a concern for the U.S. Federal Reserve. In November, the U.S. CPI rose 2.7%, by 0.3% monthly, for the 12 months ending November, after rising 2.6% over the 12 months ending October. The core inflation, all items less food and energy, rose 3.3%, by 0.3% monthly, over the last 12 months. Inflation has decelerated significantly since peaking at 9.1% in June 2022 but remains sticky and is showing signs of uptrend, and the U.S. job market is also showing resilience. If December's total and core CPI inflation rates rise, financial markets may experience significant turbulence due to investors' lower expectations for 2025 interest rate cuts. The December jobs report resulted in a significant drop in equity markets and bond prices due to a surge in the dollar and bond yields. Any good news on the economy and the job market is bad news for the markets. The reason is the markets will have to live on with higher rates for longer as a robust job market boosts the economy and may reignite inflation. The unemployment rate fell to 4.1% and payrolls added 256,000 net new jobs in December. The Federal Reserve FOMC meeting minutes from the December 2024 Federal Open Market Committee meeting also revealed concerns about high inflation. Some industry experts predict zero rate cuts in 2025 while others stick to one rate cut. Many have warned that inflationary pressures may prevent the Fed from cutting interest rates in the FOMC meeting on January 28-29. U.S. stocks made a slow start to 2025. After two back-to-back years of over 20%, what's in store this year remains to be seen. Here is what you need to know on Wednesday, January 15. The U.S. dollar index, DXY, retreated to the low 109.00 amid weaker yields and the generalized recovery in the risk-associated assets. The release of the CPI will take center stage, seconded by usual MBA mortgage applications, the NY Empire State Manufacturing Index, and the Fed Beige Book. In addition, the Fed's Barkin, Kashkari, Williams, and Goolsbee are all due to speak. USD rebounded further from Monday's fresh cycle lows near 1.0180 and traded at shouting distance from the 1.0300 hurdle. Wholesale prices in Germany and the full-year GDP growth are expected along with the speech by the ECB's Lane and de Guindos. Following a brief drop to the sub-1.2100 region, GBP USD regained some composure and revisited the 1.2250 zone. Key UK inflation rate will be at the center of the debate, seconded by a 10-year gilt auction. USD JPY reversed three consecutive daily pullbacks and advanced to two-day highs just above the 158.00 barrier. The Reuters Tankan Index and machine tool orders are due. Renewed selling pressure in the greenback allowed AUD/USD to briefly trespass the 0.6200 hurdle and print three-day peaks on Tuesday. Next of relevance in Oz will be the publication of the jobs report on January 16. WTI prices gave away part of the recent three-day strong climb and slipped back below the $78 mark per barrel. Gold prices resumed their ascent and retested the vicinity of the $2,680 mark per troy ounce, encouraged by the weaker dollar and lower yields. Silver prices traded with decent gains, although another move above the key $30 mark per ounce remained elusive.
Friends, thanks for watching. Please subscribe my channel for more videos.